discussion on financial resilience for MSMEs, challenges and strategies. I would like to invite the moderator, Mr. Nandakumar Tirumalai, Chief Financial Officer, Tata Chemicals, the panelists, Mr. Bikramjit Sen, Chief Operating Officer, Larsen & Toubro SuFin, Mr. Sanjiv Saraff, Convener, CII Western Region Task Force on Equity for MSMEs and Startups, and Joint Managing Director, Bank of Baroda Capital Markets Limited, Ms. Riddhi Gupta, Head of Strategy, Invoicemart, Mr. Bhattacharya, Executive Vice President and Chief Economist, Axis Bank, Mr. V. Natarajan, General Manager, MSME Department, Central Bank of India. Over to you, Mr. Nandakumar Tirumalai.
Thank you, Ricky, and good afternoon to all. I'm very happy to be here to moderate the session on financial resilience for MSME. MSME, as you know, is about 6.3 crores MSMEs in the country, and a large part of GDP is driven by MSME. So one of the important aspects is finance. Just as in a body, you have various body parts of heart and liver. I think the most important part is blood, and finance is the lifeblood for any company or any enterprise. With that background, I want to again introduce the panelists here. To my far left is Bikramjit Sen. He's a Chief Operating Officer of L&T-SuFin. He has worked for many years in multiple banks and got rich experience, and he's in this panel, my far left here. To my immediate left is Sougata Bhattacharya, who is Executive VP and Chief Economist for Axis Bank, and again with multiple years of experience in banking and economist type of things. To my right is Sanjiv Saraff, who works as the Joint MD in Bank of Baroda Capital Markets Limited, also a banker with a lot of experience in his last 30 years of work life. To his right is Riddhi. Riddhi Gupta is Head of Strategy for Invoicemart and also got rich experience. She also has been in banking earlier and knows this aspect well. And to my far right is Mr. Natarajan, who is a General Manager in the Central Bank of India, again with rich experience. So this is an experience-filled and banking-led kind of panel here. And with those opening remarks, I would now like to ask the first question. Actually, again, it's open to all. Opening remarks in terms of what each panelist feels about the importance of MSMEs in the economy and the importance of finance for the MSMEs. So I can go around the table, starting with Bikramjit on what his view is on the importance of finance for MSMEs and on that topic, sir.
I think we all have been listening to the various panelists since morning, and I think we all now know that SMEs are really the engine room for the Indian economy, the growth of the Indian economy, whichever metric you look at, whether it is exports, whether it is employment, whether it is GDP. I think there is no point to labor that issue that SMEs play a very pivotal role. Now, the thing that I just wanted to briefly touch upon is that today, if you look at the 630 odd lakhs SMEs which are there in the country, almost 99% of them are actually micro industry, micro enterprise, employing less than 10 people. And if India really has to move towards the 5 trillion economy that we're talking about, a large number of those SMEs or micro enterprises would need to scale. So the question that immediately comes is, why is scaling been such a big challenge for SMEs? And I think the answer to that really has been finance. The availability of affordable credit to SMEs has always been a challenge. And here, I think we'll talk about it more as we go along. What we really need to now look at is alternate way of financing SMEs as compared to what has been the traditional banking way. So the traditional banking way, as you all know, is asset-based, security-based, and MSMEs really find a challenge today, to be able to actually provide the kind of security that is required by the banking system in traditional financing. They find it a challenge to have their documents in order because many times, because of the way the SMEs have in the past, the businesses have evolved, those documents are not always very clean. And we really now need to move away from this asset-based financing to more like cash flow based financing. And if time permits, we will discuss this later in more detail, but that would be my contention and my proposition, that how do we actually make SMEs, financing available to SMEs in a more ready and easy manner.
So same question for Sougata in terms of the importance of the MSMEs in the economy. I think over a point in time it's gained a lot of importance, and going forward, what does you see the MSMEs role in the economy going forward?
So thank you again. Thank you CII for this opportunity. I think it's a given that MSMEs, particularly the M, micro and the small, will be the growth engine, and growth and employment jobs is a very, very important issue now. It's globally a problem, becoming a problem all over the world, in India particularly so. Bikramjit talked about different means of financing. I'll just get to that in a little bit. The problem with India, and you talked about the scale, the micros. In India, the so-called dwarf companies, this has become a big problem. The companies that are older than 10 years and employ less than 100 people. In terms of the number of companies, it's over 50%. Of the total number of firms. With 50%, their share of value added is about 8%. This large set of companies, their share of jobs is just above 10% on. And this has become worse. I mean, this so-called problem with the dwarf companies. Yeah? So because they are not adding value to the system. From 2011-12 to about 2016-17, or maybe even after that, the number of firms in that the dwarf companies has come down a little bit, but the share of value added and the share of jobs that has actually shrunk. So this problem seems to have become a bit worse. This needs to scale up. I mean, there are multiple factors. I mean, obviously, all the financial incentives that have been given to SMEs, they encourage them to stay small. Yeah, I mean, various forms, procurement, incentives, finance, etc. And the other problem is our labor market. So the labor market issues, inflexibility of labor, that actually encourages firms to remain dwarfs. In terms of finance, so this needs to go up, and it's been shown that states with higher labor flexibility actually have smaller number of dwarfs. So the labor issue is something that the labor policies. In terms of finance, I think this is a wonderful opportunity, because now with all these platforms, and particularly the GST connection now, there's a wall of data, petabytes of data that is now available for financial institutions, and this needs to be leveraged for getting more finance across.
Thank you, Sougata. Sanjiv, your opening remarks?
With a panel full of bankers, I wear the hat of the investment banker. And the fact is that whenever we talk of problems of SMEs, it comes to access to funds. When you talk of access to funds, I think the majority problem lies with the working capital fund or the debt funds. We're talking of equity. While India has done a little bit of, for the last 5-10 years in terms of SME exchanges coming and the self-reliant fund, which you are aware of, coming in. But is the small m or the S getting access to equity in the real way? It is the M which actually is getting the equity on the exchanges. So what are we going to do about it? The problem, in our opinion, doesn't lie with the government, doesn't lie with the providers of capital. It lies with the recipients of capital. It lies with you. It lies with the MSMEs. Because until and unless the corporate governance, until and unless the information dissemination, the asymmetry that we are seeing today, obviously you know that when you give a document to a bank, the bank looks at the data, the bank looks at the security part and gives you a loan primarily based on security. Primarily, I'm saying. Of course, there are cash flows and all. But in an equity culture, you have to give information which takes care of the equity risk. And about risk mitigation, that information has to be absolutely fantastic. Hence, the MSMEs are encouraged to come up with data that can be shared with so much of conviction that there is nothing hidden about it. Because today's world, the ESG, if we are talking of, that governance part is the most powerful part in the ESG. And I'm talking from investment banking, why I'm saying that if there was a company A with a poor corporate governance and a company B with a great corporate governance, similar profits, similar growth, similar resources, A will get more valuation because it's all about governance today. And that's what my opening remarks is, that this is the basis of getting equity capital for MSMEs. There, of course, then there are questions on challenges, which I'll take later. Yeah.
Thank you, Sanjiv. Riddhi, what is your view?
Good afternoon, everyone. So I think a lot of us towards the beginning have spoken about the fact that MSMEs play a very prominent role as far as adding to the economy is concerned, as far as bringing in inclusive growth is concerned, right? And when we look at it statistically, it also reveals that it is absolutely true, because 30% of our GDP is contributed by MSME. The government has having a vision to take it to 50%. On the export side, today we are at 48%. There are so many programs on the export side that have come up in the last few years that the aim is to take it even higher. As far as even employment is concerned, MSMEs today employ nearly 40% of the workflow. And given the country that we belong to, it's the need of the hour. So more the MSMEs, more is going to be the employment generation. So I think they continue to hold a significant part in the economy, and with the government's vision of looking at a 5 trillion number, it needs to play an even larger role.
Thank you, Riddhi. Sir?
Good afternoon, all. I'm elated to be in the company of great bankers. And as Mr. Nandakumar told, finance is a blood, like blood to the body. Finance is for any organization or company. And as rightly pointed out by Mr. Sanjay also, most of the things lies in your hands. Finance, availability of finance is not a constraint, because all the banks, they are vying with one another, I will say, to extend lending to MSMEs, which is under the priority sector norms. So they have got their own numbers, percentage, which they have to ensure. So many schemes are there, but how you get it lies in your hands. And once again, you have to keep your records, because nowadays, with the advent of technology, all the portals, everything are interconnected through the CIBIL, account aggregators, GST portal. All the data can be pulled. And if we keep our records, transactions perfect, I don't think finance should be a constraint going forward, because earlier the challenge of collaterals, because Mr. Sanjay was also mentioning about security-based lending. Now, the government, with the help of CGT, MSME and CGTC, they have come out with wonderful schemes wherein up to 5 crores, now the limit has been increased, up to 5 crores for CGT, MSME, where without any collateral, depending upon the project, banks are ready to lend. And going forward, we will discuss how the things can be taken to your best advantage.
Thank you, sir. I think access to capital is one of the most important aspects to start off with here, and capital can be in the form of equity or debt. Now, on the equity part, access to equity capital, I ask Sanjiv to talk about how one can access equity capital, MSMEs, and is there anything one can do better in terms of getting access in a easier way, faster way, so that the lifeblood keeps flowing in the MSMEs.
Let me give you a perspective, because the larger companies are able to access capital markets on a daily basis. What is the problem lying with the smaller companies? While I mentioned about corporate governance and data, the problem also lies with the fear of losing control. I have met many SMEs, promoters, who are afraid that if they were to give 20%, 25% or 26% plus, then the control of that company will go away to somebody else. But believe me, the world is changing. And this threat of losing control by giving equity is misguided. That's number one. That's one challenge. The second challenge, that technology, you're not embracing technology to the extent it is required. And you've seen all the large companies, all the startups, and I'm saying startups which are very progressive. And the word startup is synonymous with, SMEs. Please understand, I'm actually surprised that till today, when we say startup, the startup could be an SME. Or an SME which is a 20-year-old SME, which can be synonymous with a startup because it's still not grown up to a growth stage. So the world is about, as we lenders or the private equity funders are looking for good people who can give us good returns. So in equity markets, and let me give you a number, 50,000 crores was allocated in self-reliant fund. This is a great initiative in 2021. 40,000 to come from daughter funds of VC funds and private equity funds and other sources. 10,000 from the government. Aren't you surprised that out of this 50,000 in last 2 years, only 5,000 crores has been, kind of looked for investments, out of which 500 crores has come from the government. So we're still 80% non-utilized corpus, and of course we can't ask for budgetary support from the government has done enough. Then in last year, I think the Prime Minister had come up with RAMP. That's very important. This RAMP scheme, which is with the government, with the World Bank project, talks about corporate governance, talks about giving you access to technology, talks about giving you access to resources, training, everything that is supposed to create a good ecosystem by virtue of which the bankers or the private equity providers will give you money. Hence, that is something that is most important. I keep on saying that the root cause analysis for not able to get equity is the corporate governance part. Is the willingness to share your data with the banks, with lenders, with private equity providers, with everybody. And on the exchanges side, while NSE and BSE has done a great start by having 800 companies listed, but let me give you another data. Out of 800 companies, only money raised was 11,500 crores. Only 11,500 crores. You can understand the kind of SMEs you have. And out of the 11,500 crores, the total market cap is just about 1.6 lakh crores. Whatever we have seen in the US, whatever we've seen in the entire world, in Europe, India is just about 5% of what is possible in SMEs. You are a tribe which is raring to go, just that it needs a change of mindset and adoption of technology and corporate governance. That's all I would say.
Thanks, Sanjiv. I think very good point on MSMEs being startups. Actually, it never struck me till now. It's a very good point you made. Equity part we have covered. On the debt capital market part, maybe for Bikramjit, what should one do to make debt capital easily accessible to MSMEs? Is there a way of providing the debt capital in any form, could be banks, from banks or any other institutions? What is the way to make it easily accessible to MSMEs? Equity part is explained well.
Sure. So when we look at debt, there are two kinds, right? I mean, typically, you have, when you make a capital expenditure, there is, debt that you're raising a term loan or which is more long-term debt. But I think today, the real need for the SMEs, is really working capital. How do you basically get enough working capital and to keep your growth engines running and keep building up on what you have already built? Now, I'm basically, a big fan, of cash flow-based lending. And I touched upon that earlier. And today I feel, and we've been in a business where we've been actually, using that for the past 1.5 years. And we've seen some very, very encouraging initial results, in terms of not only the SMEs taking such a product, but also from the perspective of the comfort of lenders, of being able to, give such a product to the SMEs. So to answer the question as to how, debt becomes available and how working capital becomes available, I think the answer lies, in the ability to basically get your transaction financed, in the ability to see that your cash flows are created or structured in such a way that the lender gets comfort and you get the money to either buy raw materials or get a invoice discounted if you have given a credit period to a company. Now, how do you enable this? The enablement is largely now two ways. One, as Sougata was mentioning, we use a lot of data which is available, and and many of it is available, on tap pretty much. So how do you use the data, and basically establish a track record, of a company, in terms of how they're making payments, how they are actually, purchasing items, and create that kind of a transaction history which enables access to capital and comfort to lenders. The second thing I think is very important, and I want to touch upon that, is maintaining financial discipline. There is really, when in our early days, we would actually encounter a lot of SMEs who would typically, they need to pay the money, maybe on 30 days or 60 days. They would pay the money on the 63rd day. So we would go to this guy and say that, why are you, making a payment 3 days later? You obviously have the money, because you made the payment on the 63rd day. And then, it was like, okay, fine, I didn't really think about it, I missed this payment, and so on. So the other thing that I think we emphasize is that, maintain that financial discipline, because this track record that you create, obviously creates the ability for future funding and a comfort to lenders that this is a guy I can rely upon. I think these are some of the things that have been our learnings, and I think access to debt capital, the path to that could really be through some of these, alternate options rather than the traditional way of security and, documents.
Thank you so much, Bikramjit. Same question for Riddhi. How can technology help in connecting MSMEs and institutions? And we can just talk about that.
So the way I will put it is today, technology plays a very significant role in connecting MSMEs. And let's think about the fact that what is the benefit of, taking technology, okay, absorbing technology. It means that an MSME is more efficient. Going forward, an MSME could look at lower costs. The MSME could look at larger markets, right? You're going to be exposed to more markets, not just domestic, but even international markets. And there are a lot of examples to prove this point. Let's take some examples here. For example, Udyam registration, right? The fact that today we have close to 1.6 crore MSMEs who are registered in Udyam. It's a click of a button, a few buttons with few information. There is one central repository which has access to information of about 1.6 crore MSME. Imagine the power of that technology. Let's take another example, GEM. I'm sure a lot of you all would have been a part of the GEM process. GEM is a classic example of how you can build a digital ecosystem to support MSMEs. So today MSMEs are using this platform to find new buyers, platform to find new markets. Similar to this on the finance side, there is a concept a lot of you all would have heard about, which is TREDS, which is the Trade Receivable Discounting System. It's an RBI initiative on providing trade receivables to MSMEs. Today, all the TREDS platform put together would have done close to 2 lakh crore of financing and touched the lives of, say, 60,000 MSMEs. Imagine the quantum of strength these alternative products are having with the sheer power of being a digital platform. Let's take maybe one or two more examples for understanding how technology is helping, and each of these MSMEs should look at this. Say, for example, ONDC. I'm sure a lot of you all would have heard about ONDC. Today, ONDC is also solving the problem of ensuring that MSMEs find more buyers. MSME find more markets. Even UPI, as a matter of fact, today, it's doing real-time debit and credit. UPI is even talking about lending today. So imagine you as an MSME who's been using UPI will now be able to do get some kind of a financing through it. So the idea here is that it is going forward in the coming years, technology is very important, and MSMEs should start building and using technology in various ways, whether it's market, it's access to finance, whether it's access to markets, whether it's, building more infrastructure. You should absorb more and more technology.
Thank you, Riddhi. And question for sir. In terms of how can, in the last many years, banks have made access to funds very easy for MSMEs. What more can banks do to make it even more easier to access, or steps taken so far, and what should be taken going forward, sir?
Yes. See, Madam had told about adoption of technology by the MSMEs. Similarly, banks, all banks for that matter, have adopted technology and they have taken it to a much higher level. Now you can see that digital lending platform have been developed by all the banks, and without going to a brick and mortar branch, the MSMEs can have access to what are all the credit facilities they can have. And in this, many fintechs, they also play a very crucial role because they have created marketplace and they bring together the MSMEs who require credit and banks who are willing to extend credit so that in a very transparent manner things happen and at the most competitive manner, like what Madam was telling. This Threads is such a wonderful platform where you get the most competitive rate for discounting your invoices. And again, if the transactions or the way you conduct the business or your transactions, earlier also it was told about the delay in making the payment. These things affect the credit history. And nowadays, like checking the blood sugar or BP level, this CIBIL credit score has also become a very important part in deciding the considering or sanctioning a proposal. So if you are aware, most of you must be aware, you can also just check your credit scores. But to keep your credit scores at a much higher level, you can also get the benefit of the rate of interest, because since the risk will be less, banks are willing to extend or give concessions in the rate of interest also. And as far as our bank is concerned, here the theme is ESG, finance, digitization and exports. ESG also, we have taken pioneering steps, and our bank is in the process of implementing various guidelines for the bank as a responsible public sector organization. We want to reduce the carbon footprint, and at the same time, we are willing to extend more competitive rate of interest to those units who are adopting these technologies. We have come out with some schemes specifically for such units, and we have also introduced deposits, green deposits. So it is a win-win situation for us, so that the country, we help ourselves, our future generation and the country in a very big manner in the days to come.
Thank you, sir. On the access to funding, we covered all the aspects, and if you look at, I'm a CFO in Tata Chemicals, any access to funds, I have an option of equity, which is not every year, once in a way. I have access to debt capital, which can be more of bankers or a market, let's say, issuing a bond. I have many options as a large corporate to access the debt capital market. But the bond market access for MSMEs in the form of issuing a NCD or a CP, how is that feasible? Or Sanjiv, about his point of view on how can MSMEs access the bond market, which is very large availability of funds, and what should MSMEs do to access that fund, and any views on that, Sanjiv?
See, as investment bankers, we can create terminology of whether it's a very bond, mezzanine finance, equity, debt. The basic funda is that if you are a good MSME, what I meant to say, you have a good credit rating. The credit rating is the first prerequisite for getting access to bond market. Because if you have a BB minus, bonds, then you'll not get it, right? But you have a A plus or a AA. I'm sure, the bank treasuries are looking for such opportunities. There is a vibrant market now coming up in bond market, the retail segment that is looking for bond market. Just go back to 20, 30 years back. When there were all banks offering you fixed deposits, weren't corporates allowed to take fixed deposits? And they got it, right? They got fixed deposits because they were offering better interest rates. So if you had a corporate offering better interest rates with a little better security and the risk of not failing, you'll buy that fixed deposit. Same thing applies for the bonds. I would only request the SMEs, please get a good credit rating. Please ensure that your information dissemination on your company is so good that the people do not take it as a risky proposition, because the junk bonds is something at behind of everybody's mind. So what will happen if I invest in a SME bond? The SME word is not bad. It is the fear of not getting information for that particular security is creating a fear psychosis. But if as a system, as an MSME, with the bankers, and the banks play a big role because they have access to all your information. They have access to all cash flows, as Bikramjit said, cash flow based funding. The bond is also about cash flow based servicing of the interest. That's something you should remember. Thanks.
Thank you, Sanjiv. So we covered all aspects of financing in terms of the cash flow-based financing, bank financing, and debt financing here, and digital financing from Riddhi. Question Sougata in terms of on his macro view, since the Economist has got a lot of, very good macro views to share. So in terms of what can the government or RBI do in this regard of financing to make things easier? What has been done so far and what they can do more so that everything is free-flowing to the MSMEs on the regulatory and the that aspect?
So, I think a lot of it has already been covered. Let me first start with one part that Sanjiv on the ESG part. Sanjiv covered the G, the governance part, which is very, very important. You just heard Mr. Kamath in the last session talk about the Orchid Hotel experience. So at that point in time, it was a differentiating factor. So at this point in time, this is basic hygiene, the E part, the environmental part. And remember that, there's a huge amount of capital. Sanjeev was talking about the fact that capital is not a problem. All my colleagues were talking about that capital is not a problem, provided, certain conditions are met, disclosure, data, governance, etc. The E part will unlock a huge amount of capital. Our very ambitious net zero 2070 goal. I've heard figures of the range of $100 trillion over the period that will be required for the transition, and without SMEs, because in the even the larger companies, the supply chain all comes down to the smallest of the companies, the nuts and bolts that you were hearing about in the last session. So the E part is very, very important. Further than that, so the E part will be a requirement. It's not going to be an option anymore. In terms of other policies, so again, we heard about the corporate debt, corporate bond market for SMEs. It's a potentially large segment. One of the key, the remarkable features that I've seen, a series of shocks over the last 4 or 5 years hit a large segment of the economy, particularly MSMEs. The COVID, then the interest rate increases. Despite that, in bank credit, the bank portfolios, there's been almost a negligible increase in the amount of stress in the SME portfolio. Yeah, largely the medium and the small, not the micro. One of the key reasons was this ECLGS program that the RBI and the government introduced during the COVID period. That, I think, is a major template for financing, because there are some risks that investors will not be able to assume in the market that has to be borne by somebody. So that an ECLGS type credit backstop program is a very important requirement for the small and medium. In many sectors of the economy, but particularly for the MSME part and in the corporate bond market, a backstop type measure that needs to be designed, ECLGS format, but something else. The other part that is required is a form of market making for SMEs, particularly in the corporate bond market. So the role of PDs, the primary dealers in the sovereign bond market, a similar market making mechanism, which is beginning to now come about. The Harun Khan committee report, etc., talks about a market making, and SEBI recently had a discussion paper, DP, on market making procedures. So that's another measure from the corporate bond market that probably will be able to get more SME funding from the corporate bond market. Some credit enhancement mechanism is also important, because that pushes down a BBB or a BBB minus up to A level, which is more amenable to drawing funds from the credit bond markets.
Thank you, Sougata. I think it's 1:40 and pretty much past lunchtime. So I think we'll open up to the audience for maybe a couple of questions for the panelists here, and then we'll close with that.
Before you ask that question, I just want to add one line on Sougata's thing, that E part. Let me give you one hope that you can actually MSMEs get a little ahead of the larger corporates. Is called the green bonds. Now, green bonds is just have started in the sovereign market, as you rightly said. But if you as an SME are less polluting, or you are less, or saving energy, or something, whatever you're doing for the environment, believe me, even in a small way, if you were to come up with green bonds, it will be competitive interest rates for you in the market, and the buyers of those bonds will lap it up. So I think I'm just giving an idea as what to do.
Very good point, Sanjiv.
Hello, my name is Vishal Sanghvi. We do the innovative electronics devices. What is the challenge? And this is, we adopt this, all about IoT, AI. So what is our challenge about us that when we design anything, sometimes if we delay to much mass production, then it's copied by even China also, which we experience. So here, so I want to ask you that, because this new age of businesses, because we produce devices which do not exist in the world, like some of the new smart cameras for the vehicle navigation system. So I want to ask you whether we should also, like India, how is it easy for financing for the, bulk production of our, we have to make a lot of housing, a lot of PCB design actually. So whether we should look after our system concern to establish in other country where they also invite about innovation things like Japan, Saudi, UAE. So we can sometimes, make sure when we design anything, we should immediately launch. So something here, it get time in India to have a capital access. We should also get access capital from the other country. Otherwise, if we delay of any launch, like we have experienced, we have launched something 4G camera in 2018, but we delay about bulk production. So the technology has been hired by the Chinese company. So we don't get advantage actually. So that's my question about it.
Good, thank you. I think it's more in terms of overseas fund access, how to get all the bankers here. Anybody can take the question here.
Or we should have a established system concern over there, something partnership, and that access fund over them.
Sure. Yeah. So in terms of how to access funds overseas.
We have seen great lot of FDI coming into India because India is a great destination for investments. So I think that's not a problem. Again, the same question that if, for example, you were in Germany trying to get access from Germany, the problem is that with that country, if that country doesn't have funds at the moment and India is a better destination, why are we looking outside? And if you ask me, the funds are available in India. Of course, if you have a base in Germany, for example, this is just an example without indication of any country, and that country understands the technology that you are giving, then getting funding from a German-based financial institution is definitely possible. Because they are also looking at ways to support the economy both inside and outside. So that's not a problem.
Thanks, Sanjiv. One more last question, then we'll close. Yes.
Yeah, good afternoon. My name is Rajiv Bhatia, student of business strategy. I find, banking, since I've been involved with it, the financial markets also since the 90s, the human interface in the old days used to be very different from what it is now. It's great to see that we've worked with technology, and I have also worked with technology. And technology has definitely been uplifted. But I find our human interface today seems to be getting increasingly challenged. I faced a simple small situation where an auto dormanting of a securities account, not to name the bank, happened 6 months ago, and it took about 6 months to have it cleared only because the bank or the bank system did not understand the difference between a private limited company and a partnership firm, and they kept on asking for the articles and memorandum of association over about 65 emails sent, and people spoken to across the board. In situations like that, it really gets grueling, and sometimes small offices, I'm not referring to the medium-sized businesses, I'm a MSME committee member here on CII also for a number of years. I work closely with the Northeast too. But these certain basic things exist. Even in the Northeast region, I find a lot of problems, in terms of the human interface. So I think it's something that really needs to be addressed, to go back to a little bit of what we had in the 90s, those managers, etc., who you could just reach out to, talk to, go yell at, etc., but in a few hours, your problems got sorted out. Now, who do you yell at except, at your own office phone or walls or whatever else? So I'm just talking about a human aspect. Thank you.
So on the human aspect of this, you want to take Riddhi? Or, yeah, better.
See, I can understand the challenges being faced, particularly being a commercial bank, and we also come across many such instances. Our endeavor is always to make our staff understand the importance of the customers. But that is the challenge which the banks have. You have very rightly pointed out about the vast difference between what banking used to be in the earlier days and what it is now. In every industry, changes are bound to happen. But however, along with this, the technology has also improved so that instead of only conversing with the branch or the low-level office, you can always escalate the matter. And definitely, many forums are available. We have got this complaint management system, everything, where whatever complaint we receive are immediately taken care of, and we have got timelines within which they have to be closed. Hopefully, going forward, we will also ensure that our staff who are in the branches or front office, they understand the importance of customers and attend to them. Thank you, sir.
Good. With that, we'll conclude our session here. Thanks to all the panelists here for taking out time and coming here and spending a couple of hours. I hope the views were useful to everybody here. And thank you very much for joining us here. Thank you, Ricky.
We will now felicitate the speakers with mementos, requesting Mr. Tirumalai to please felicitate the panelists. Request Mr. Sanjiv Saraff to please felicitate Mr. Tirumalai. We will now break for lunch, but we will restart at 2:20. So we'll have a very short networking lunch break.